Imagine this. Your company gets hit by ransomware. Systems are locked. Customer data is exposed. Revenue is bleeding at £10,000 per day. You breathe a sigh of relief. At least you have cyber insurance, £5 million in coverage. You've been paying premiums for years. You file the claim, submit the paperwork, wait for the payout. Then you get the letter. Claim denied. This is happening to UK businesses right now. And the reasons why are both shocking and completely preventable. Let me tell you what's really going on with cyber insurance in the UK, and why even businesses with millions in coverage are finding out their policies are worthless when they need them most. The uncomfortable truth about UK cyber insurance. Global insurer CFC reports a 99.1% claims acceptance rate across 4,000 plus annual claims. The UK cyber insurance market has actually become quite buyer-friendly, with abundant capacity and competitive pricing in 2025. So if most claims are getting paid, why are we talking about rejections? Because when claims do get rejected, the reasons are devastating. And most UK businesses have no idea they're at risk until it's too late. Recent industry data shows that while acceptance rates are high overall, over 40% of claims in certain sectors still get denied. The difference between companies that get paid and those that don't comes down to 5 critical failures. And here's the terrifying part. Most rejected claims aren't because of fraud. They're rejected because businesses genuinely believed they were covered, but the fine print said otherwise. Reason number 1, you lied on your application, even if you didn't mean to. This is the number 1 reason UK cyber insurance claims get rejected. Most companies don't even realize they've done it. When applying, you answer security questions. Do you use multi-factor authentication on all accounts? Are systems patched within 30 days? Do you have endpoint detection across all devices? You tick yes because your IT team handles it. Policy approved, premiums paid, then the breach happens. The insurer investigates and discovers. MFA on only 80% of accounts. Not 100% quarterly patching, not within 30 days, EDR missing on remote workers' devices. The insurer argues the policy was issued under false assumptions and walks away. This happened to Cottage Health with Columbia Casualty. After patient data was exposed, insurers denied coverage citing misrepresentation of security capabilities. The application conflicted with actual patching schedules. The gap between what they claimed and what they implemented voided the entire policy. Reason number 2, you couldn't prove your security was actually working. Having security tools isn't enough. You need to prove they were properly deployed and actively working when the breach occurred. Insurers want evidence, MFA logs showing enforcement, patch reports with dates and coverage, EDR deployment across all endpoints, backup verification logs, email security filtering reports. According to Orbis Solutions, 44% of denied claims fail due to lack of evidence. Claims get rejected because endpoint logs only went back 30 days instead of 90. The tools worked, but companies couldn't produce the evidence insurers demanded. The standard isn't mostly secure. It's comprehensive, verifiable protection with documentation to prove it. Reason number 3, you didn't follow your own security policies. During application, you submit documented security policies, incident response plans, backup schedules, vendor protocols. Then the breach reveals you weren't following them. Policy says report within 48 hours. You waited 2 weeks. Backups required daily, they ran weekly. Vendor assessments required, never conducted. Failing to follow documented policies gives insurers grounds to deny claims. Most UK policies only cover claims reported quickly, often during the same policy period. Courts consistently back insurers when companies wait too long. Reason number 4, the thing that broke wasn't covered. UK businesses assume cyber insurance covers cyber stuff. Wrong. Ransomware, often covered, but with strict conditions. Social engineering fraud, frequently excluded vendor breaches, usually not covered without extra supply chain coverage. Pre-existing vulnerabilities can void the entire claim if undisclosed nation-state attacks, often explicitly excluded. Insurance policies aren't written for technologists. They're written for underwriters. That gap is where denials happen. Reason number 5, human error made you negligent. Human error causes 95% of cybersecurity breaches. Insurers know it. If investigation reveals basic negligence, expect denial, phishing victim despite skipped security training. Lost laptop with unencrypted data. Admin credentials in a spreadsheet. Critical vulnerability unpatched for months. Misconfigured cloud storage. Insurers argue the incident was preventable. If they prove it, they deny. This is why insurers demand evidence of regular security training with completion records and testing results. The real-world impact on UK businesses. Let's talk about what this means in practice. According to the UK Government Cybersecurity Breaches Survey, many businesses with cyber insurance rarely make claims because they fear premium increases or believe the excess makes it uneconomical. The scale of incidents we had never got to the point where it was worthwhile. One head of cybersecurity told the survey. The increase in premiums and the excess meant it just wasn't going to be economical to make a claim. But when major incidents do happen, the financial impact can be catastrophic. Marks & Spencer's April 2025 cyber incident resulted in £100 million in insurance payments, paid within months, demonstrating that legitimate claims with proper documentation do get honoured quickly. The difference? M&S could prove their security measures, provide documentation, and demonstrate they'd followed all policy requirements. How to ensure your claim gets paid. If you have cyber insurance, here's what to do right now. Read your policy line by line. Know your exclusions, sublimits, and conditions. Document everything. Keep MFA logs, patch reports, backup records, training certificates, and incident documentation. Retain for 90+ days. Match application to reality. If you claimed MFA on all accounts, deploy it on all accounts. Follow your policies. If procedures say daily backups, run daily backups. If breach notification within 48 hours, report within 48 hours. Conduct regular audits. Proactive IT risk assessments identify gaps before breaches happen. Get professional help. Managed service providers specializing in cyber insurance, alignment, monitor controls 24/7 and maintain documentation. Insurers are moving from "do you have security" to "prove it" continuously. The bottom line: UK cyber insurance can work. CFC's 99.1% acceptance rate proves that. The £100 million Marks & Spencer payout proves that major claims get honoured when businesses do things right. But getting your claim paid requires more than just having a policy. It requires truthful applications that match your actual security posture, comprehensive documentation proving your controls were working, following your own documented security policies, understanding exactly what your policy covers and what it doesn't, demonstrating you weren't negligent. Failing any one of these is enough to get a claim denied, even if you've been paying premiums for years. Don't wait until you're breached to discover your insurance is worthless. Review your policy today. Audit your security controls. Fix the gaps. Document everything. Because the worst time to learn your cyber insurance won't pay out is when attackers are demanding a ransom and your business is bleeding revenue. Did this video open your eyes to cyber insurance risks? If you found this valuable, hit that like button and subscribe for more content that protects your business from costly mistakes. We break down complex insurance and cybersecurity topics so you know exactly what you're paying for and how to actually get covered when disaster strikes. Thanks for watching. Stay secure.